Hello, everybody. Welcome to another episode of Erickson TV, courtesy with Lauren. Hello, Lauren.
Hey, everybody.
Hey, Lauren. There's kind of there's some common rules of thumb that we use in retirement planning when we're doing projections for people in retirement. Often it's stated that your expenses go down when you retire compared to what they were when you were working. You kind of heard that. Have you heard that one before?
Yeah, as long as you're not an early retiree.
Right. Yeah, I'm sorry.
Yeah.
So let's say normal retirement.
Yeah. That often happens to a lot of people.
So I want to give credit to our Sue Fulkerson who found this article and gave me this article about checks and balances of retirement. And they did a survey and they found, they did a poll, and for people that were going to retire, 8.9% of all people said that they thought that their expenses would be higher during retirement, and the remaining percentage said they would be lower during retirement. So that's a pretty high number.
Right.
So basically, 92%, 91% are said that's going to go lower. What actually happened when they followed up the survey, though, is that it turned out to be 16% of the people's expenses went higher.
Oh, so we have a nice little chunk of people who are not doing a good job of estimating how expensive retirement is going to be.
And I started kind of digging into the article and what that reason would be. And what they said is that, especially in the early years of retirement, people tend to explore and travel a lot, do things like that.
Yeah.
But they also is because one of the things, number one goals a lot of people like to do before they retire is, for instance, pay down their home mortgage to zero.
Okay.
And maybe they cut back on their donations and charitable. So what happens is their itemized deductions go lower, and they end up paying more taxes possibly during retirement.
Oh,
so
interesting.
It's kind of they go to the standard deduction.
Right.
So the taxes, because their income level and withdrawal level from the retirement accounts is the same as when their earnings were. So taxes actually went up during retirement.
That's interesting, and that's surprising. I never even thought about that.
Yeah, I thought about that. And then then of course one of the big ones, we talk about this all the time, is medical costs.
Oh yeah.
Even for people that are covered under, let's say, Medicare, and they might do the supplemental policies. Often there's many things that are not being covered by that policy. If they have to go get dental work, thousands of dollars of dental work, that's generally not covered. So as we know, medical costs do increase as you age and go farther along retirement, and so that's just that cost that comes into play. And then last but not least, we know we talk about this all the time, the cost of just daily living goes up every year.
Right.
On that. So what my takeaway from this is that people need to strategically make their investment allocation perhaps different than they might initially think, for retirement.
I think the biggest thing is that, yes, most people's costs of living do drop when they retire, but apparently twice as many people are going to see their costs go up as think that their costs are going to go up. So I think it shows that those rules of thumb are useful, and they're often right. I mean, that's why they become rules of thumb. But you really should make sure that it applies to you.
Right. And my takeaway is that if you want to give yourself the best chance of success for a long-term retirement, it makes sense to really look closely at the allocation of how you're going to invest during those retirement years, because I believe that this is an indication to me that people will need to invest for growth just to have the chance to survive their retirement portfolio. So thank you very much for watching this episode of Erickson TV. We'll see you next time. Bye now.
See you next time.